Hello, everyone. Welcome back to the Prospero.Ai stock market live stream. We are back to our normal schedule this week. Welcome, everyone. Hope you had a great weekend. We're going to get into a ton of great topics today. George is back home. We are at our usual setup now. So that means he'll be fighting with his camera in the sun, but we'll see how it looks when he joins here. He might be on his second setup again today, but eventually we'll get it figured all out. Before I get into the topics, let me know in the comments what you did this weekend, if you had a great weekend. We talk about stocks, finance a lot here, but I'm sure some of you guys did some exciting things over the weekend and you had your off time. So let me know what you did in the comments. So today there was a big shakeup in one of the indexes. Amazon will be joining the Dow, and they will be replacing Walgreens Boot Alliance. And we'll be discussing what that means for Amazon and what that means for Walgreens, and how we expect the indexes to change over time going forward from this. Next, we reported a story last Wednesday, or no, did we stream Tuesday? Tuesday or Wednesday, where Reddit was selling all of their user data to an unnamed AI company. That company has been unveiled, and it was actually Google, which was surprising to me, and we'll see what George thinks about it when he gets in here. Here he is. Looks like we got some webcam things going on, but I'll just keep running through the topics until I see George ready to join. Next question, I think it's on everybody's mind now after seeing. I guess we should talk about Nvidia earnings as well last week, but now that AI stocks are going up and up and
by the way, but yeah, just keep going through the topics. I'm almost ready to go. Just working through the normal, not the abnormal.
Yep. All right. So as George's getting his situation set up, the question that's on my mind, like I was saying, is that is AI becoming a bubble? What's the time frame on it? Is it inevitable if we're not there yet? All the things surrounding this AI hype that we've seen now for, ChatGPT. When it was released November of 2021, no 2022, I believe. So it's just over a year now of the AI hype cycle. We'll dive into all of the details around that topic. Next, a Texas man is in a bit of trouble. He is the husband of a woman who worked at BP, and he got charged with insider trading for overhearing stuff they were talking about on phone calls. We'll talk about the money he made and the kind of penalties he faces because of this situation.
Steve, is this looking a little out of focus to you? I think I might have to tinker a little more. Or does it look good? Sometimes with the light, I can't tell.
It does look out of focus, but at least it's not uber bright today. So, yeah.
I think I just have to do a little tinker. I think we're finally ready. We're finally getting more ready with this, but yeah.
Let's see. At least the background's looking really good, even though it's a little overcast.
Yeah, I think today is the big day that I finally figure out how to use this camera.
Hey, Wolf. Thanks for joining us. Hope you had a good weekend. Now we're all back in our usual spots, stock market. Let's see how the.
All right. Did it work? Did that work?
Yeah,
that looks great.
Yeah.
We did it.
It looks perfect.
All right.
Nice.
Finally getting the hang of using this camera. Now I just need to grab my phone and some tea, but I will be listening. Oh God, we finally got it, Steven.
Yeah, this is great.
But yeah, I mean, maybe what I'll do is I'll just answer the first question, and then do some of my stuff as you lead into the next one, or perhaps ask some more questions. So yeah, I would say that it's a very interesting kind of start to the morning. I think that the big issue that we're seeing right now is that there's just and a lot of people talk about it, right? there's just like been this really impressive bull run, and I had some. I obviously had like I spoke in front of like close to 1,000 people last week, which was crazy. It was a great experience. We might talk about it um, a little more later. But one of the things that I learned from that experience, especially talking to people, I have a few takeaways, and I know I cut one of your topics, so I might circle back to the second one. But I think the first one is all like, and I think a lot of people struggle with this. Everyone just being like, "Oh, like it's an all-time high. Like, what should I do? Bear market worries, blah blah." Blah. And they sit at the sidelines, and I was like, "I gotta tell you something. There are so many people that say that and have turned out to be wrong. I see so much more of that than the people that are just like, oh, I wish I had like hedged more or like, really like taken this like, this little bear correction or whatever more seriously. Now, obviously that's not universal. There's a lot of people that lose money in bear markets, and I'm not trying to undermine that. But I would actually say that the big difference is that um a lot of people's mistakes in those come from overconfidence and just getting way too confident about the bull market and whatever. And it's just like that's a harder risk profile to deal with because people that get overconfident, they always do. And there was this one Facebook group that I was part of that I left because it was like, run by like a grifter, basically. And there was all these people in it that lost money on like in the bear market and they were taking on too much risk. And then they just went right back to the like right when the bull market started. It's like nobody pretended, like everyone pretended like they didn't lose all this money and they didn't like overbet and get overconfident and all this. It was like some of the exact same people, actually, some of the people that made picks that lost a lot of money. We're right back to getting overconfident. And that actually shows it's actually more of a wiring problem. So the good news is if you're someone that just like tends to be overly concerned about like a bear correction, you're probably dealing with just some better investor DNA to start. But what I would say is like, you can push through that. We obviously talk about intelligent hedgings. I actually just think the best thing, if you're worried about your portfolio, is either SQQQ, if you're tech heavy, or some of it being SCC, which is a 2x bear consumer discretionary. And what I love about SCC as a hedge is it's just like a lot of investing is trying to like shrink the world into things that make sense to you, right? Or things that just kind of like hold and will make sense in like a lot of different circumstances. So, part of that like world shrinking right here is me saying like, you know what, there's a lot of bull scenarios, there's a lot of bear scenarios, but I will say in almost all of the bear scenarios I see, whether it's more interest rate driven or interest rate related job loss or personal spending crisis, just purely related to consumer credit, crunching in on that end and actually having really not as much to do with jobs, just less like, just more people having to pay the piper, getting the loans called, blah, 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 et cetera, right? So one of the things that I think is, really important about that is that I just don't really see any scenario in where the bear case exposes itself and that consumer discretionary industry doesn't get slammed because like all of the bear cases are going to come for that in my I actually rarely say that and it was a mistake. I should say most, like, because there's stuff like war, like like lower probability bear cases that wouldn't. But I would say most of the bear cases are going to see that consumer discretionary index get hurt. And that's the really nice part of that. Because when you see that part, uh, you're just going to have a lot more downside protection, right? And you might even recover like some of your losses and get closer to neutral, even if the market gets hit pretty hard. And then on the other end, and it's always good to think about these things in this way, the other end is like, okay, the bear case doesn't come as much. maybe consumer discretionary goes up a little bit. I mean, you can't, with all of this stuff looming, especially as long as there's like a lot of these outstanding debts, you can only get so bullish on consumer discretionary. So this is how we talk about things. There's kind of like a cap on your losses in that one. But, even if people do just end up over speculating on consumer spending or whatever, it's definitely going to be the result of a better than, forecasted economy, or this AI boom just happening so much, or the stock market doing so well, it's actually putting more money in people's pockets. So they actually have more, even if they have debt, they have more money to spend because of their stock profits. So I think that is a really, really important thing to remember, and why we recommend things like this, and why we just kind of like set up scenarios and just like, no, that's what I really love about it. Because like in that scenario, if you own tech, if you own all these other high upside things, you're going to make so much money off those plays, off like the ones that we recommend, like healthcare, like Eli Lilly, SMCI, Meta. Like those companies are going to make you so much money, you won't even care that you have that downside hedge. All right, I'm getting my tea, but I'm listening to you, Stephen.
I do have a question following up to that, but I'll wait till you get back. It's funny
I can hear.
Oh, you can hear me. Okay. So when you're saying you would like to be short consumer discretionary, because you're able to get that downside while also like taking part in the upside with the tech, is that are you saying that in this particular environment and situation we find ourselves in now with the stock market, or is that like a general um, position that you would take like in all bear cases, um, like going forward, if you're feeling bearish about the economy, like consumer discretionary would always be a sector that you would feel like you'd want to short, or is it because of the certain situation that we find ourselves in now?
That is a good question, Stephen. And I put too much milk in my tea as I was rushing back. But, sometimes life's hard like that. Okay. So, I think you've watched me long enough to know that everything I'm doing is very specific to scenarios. So yes, it's very specific to this scenario. And specific to the scenario, I would say very clearly because, well, I'd say two primary reasons. One is that all of that consumer debt, right? It's just a very easy story of like, mounting consumer debt, like rising delinquencies, not fast, but rising. That tells a story that like some hit to consumer spending is coming, right? Because if you're looking at it like a zero sum game, even if a smaller fraction default on those debts than expected, or they just like their credit scores get hurt and they don't have access to new credit, like someone's paying the piper at that on some point. It's just happening. It could be a big thing, could be a bad. So that's why it's just like it's a very safe. Like actually, I had a very interesting conversation with someone once about it was maybe a few months ago about them wanting to learn how to like hedge like disaster risk, and they wanted like just general disaster risk, and they were talking about all these things, and I was like, well, you're just like what I would suggest to you if you want a general disaster risk, it's really expensive. And like you can get general disaster risk on the market, but like it's going to really eat into any profits you have and even could create losses if you're long. So it's just like not disaster and it's just like not the best performance. Because like especially if you're buying options, that's just gonna like eat away at your profit. The options are gonna expire, blah, 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 all that stuff. So what I would say about that is that unless you're a very, very advanced trader, all of your hedging has to be tactical. And that's one of the reasons I recommend SQQQ. Is not just because I like, the QQQ is a pretty bad thing to bet against, in any kind of recent history. But it's just because most people own tech, even without seeing their portfolio. Like, it's a safe assumption that they've got some tech in there. That's why I like to recommend that. because it's I without seeing someone's portfolio, I can make a pretty educated guess that it's going to help them in some fashion. But I would say the other part of that is that you have to be tactical and to your other point, like consumer discretionary in any kind of economic difficulty, it's called discretionary for a reason, right? And the other one is consumer defensive, right? So look at the different language there. Basically, that tells you everything you need to know about how well this stuff generalizes, right? Whereas it's like in any economic difficulty, consumer discretionary is going to get hit. But I would say that there's another component. There's a value component to this, right? And I would actually say, if you look at our sector analysis and things like that, consumer discretionary, actually given these risks, has performed pretty well. So that's one of the other components that I would say more specifically, where it's just shorting consumer discretionary in any potential macro risk scenario, you're not going to do that bad. But in this particular one, you also have working for you the other two factors that I mentioned, that there's mounting debt, rising delinquencies, and that could combine with, bigger macro events like job loss around interest rates, blah, 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 that could just snowball. Or it can combine with other things, which is I think real estate prices are getting pretty overpriced, right? So then if you start to have all of these things kind of congeal into one thing, and we've obviously seen what happens there before, then yes, then it can start getting really, really big. But I think that if there's a takeaway there, it's the consumer discretionary is generally pretty good, but in light of the debt and in light of the fact that it's actually been performing pretty well, in light of these risks and in light of the mounting debt, that kind of what makes it a frequent, that's an easy target for me on hedging any market, but this one especially, because it's just there's too much evidence that in most of these downside scenarios that a sector, consumer discretionary, that's traditionally one of the first ones to get hit, one of the hardest ones to get hit, that that is going to be an even better bet because of the debt situation. And that's also just to even maybe stack one more small lesson, and I've been talking about this one for a while. To stack one more small lesson, I think there's a component of it that is also that we're also talking about communications, right? That's the next layer. We kind of talk about first you see the consumer spending, and then you see communications. Google, Meta's in communications. That's why it's been doing so well. If anyone wonders, telecom is in there. We could talk all day about why sectors are bad. But that's obviously why communications are doing well, because communications are also kind of a tangential AI play. Then you also have the other aspect of communications being very, all that is one of the things that ties them together. A lot of those businesses are ad based, and when people start spending less money, people start spending less money on ads. But to do one more thing in terms of even how many layers I'm thinking about this for a company like Meta, right? Even if less money is being spent on ads generally, I think a company like Meta that is doing smart new things in AI, rolling out potentially new AI products, and especially some of their interactive stuff, I think could play very well with generating new ad revenue. Then we're talking about that's why one of the reasons why I think Meta is such a safe pick, right? Because even though we can acknowledge that risk, I do think they're better insulated from it than a lot of other companies in their sector.
So one thing I actually didn't bring up to you before, but I feel like we probably should talk about it today, is the Nvidia earnings that happened last week, that they just continue to outperform everyone's expectations, and it's amazing. Especially when, I mean, I could feel it last week, how tense the market was getting and how anticipatory. of it not being able to meet it because they've just gone up so much so quickly, and it's like every time they've delivered. But they did it again, and the stock went up, and it's amazing to see. I'm looking at QQQ net option sentiment now; it's at 46. So seems like the Nvidia halo effect is going on the whole market.
Yeah, I mean, when you control that much of the high performance chip market, and the high performance chip market is working in AI, and basically they're like the name in that, like, yeah, their earnings are gonna get like really, really important. I wasn't covering stocks like back in the day, but I'm sure when like US Steel used to report, like I'm sure the whole market was going pretty bonkers over like what they were doing. Um, so I think like that's definitely the really important thing. And like we obviously talk about that all the time. And it's really funny where it's just like, yeah, we did what I actually like, I wrote about it in the newsletter. But you know, I think I actually put a lot of thought into that because it's a really good risk lesson, I think, in how we handled everything with that LRCX uh NVIDIA SMCI play last week. And I think, basically what we saw pretty clearly when you have like 100 net option sentiment for NVIDIA, but a 65 upside, right? You're basically seeing a lot of short term bets, which are great, but then like unconvinced long term at 65, right? So what that means is it's just like you're never going to be short on people gambling on something like Nvidia, right? But the way to think about it is it's just like I would say what my guess of that high net option sentiment is a bunch of institutions just taking a flyer on that, right? And and just being like, we'd be idiots. Like if we just didn't put a little behind like seeing the upside on this and exiting quickly, because that's what like institutions with high frequency traders have the benefit of, right? They're going to be the first ones out the second there's news that we don't have access to that. So like there is really nothing for them to lose to take a flyer on like that kind of upside. And that's where you can see like such decisive, like, because I think I mentioned this too. I've never seen net option sentiment stay at 100 as Nvidia was many weeks leading into earnings. Only Tesla last year when we kept kind of playing it. That's the only other time I've seen it at 100. It seemed like institutions, I would guess, we're pretty certain that you had to take a flyer on that. But like, why? Like, so why do we do it? Because like we're not really take a flyer people, and we don't really think retail investors should be like take a flyer on that people, see what happens, because, and this is the important part, we don't get the same execution. So that's why you have to be realistic, and I think some people don't realize kind of like all the nuance there. Um, but it's a very interesting question. Rich Wolf, are you related to Wolf Stigma? You got like a little wolf family going
You
there?
stole my little comment. I was going to say, is he a cousin? I was going to say the same thing.
Gotta be quicker with me, Steven. Um, but yeah, so I think that's the first setup, right? And we're very clear about like why we don't play Nvidia because of that. Because I'm just like, look, if these institutions are not like convinced enough long term, I'm not convinced. Like, long term is important. That's where it starts for me, and everything else is risky. And what you have to even understand is when institutions play short term options, they know they're risky. Like they do it with much like eyes much more wide open than retail. And that's why I'm saying, like, I think it's likely that a lot of institutions were making like smaller bets for institutions. You're probably still talking about 10, $20 million bets because they can't get it like in short-term options. So they're not going to get out of bed for anything less than that. And I mean, that might even be low depending on the institution that you're talking about. But like that's what's hard for me. Then, move on to SMCR, which is, one of our, like, you might call it darling stocks, and we love it. And like one of the reasons we saw that the value had actually turned in LRCX was like that. But like, yeah, high dark pool, high short pressure. And honestly, SMCI had one of the more interesting, volatile weeks I've ever seen. It was down the first couple days, then up 32% short busting, of course, like on NVIDIA's earnings. That's the crazy thing. I can't recall ever seeing that particular thing where a different company in your sector, like that does something very close, you actually, they pretty, I think they might have more than doubled NVIDIA's increase on the day. I mean, that's really just a reflection of the volatility there. But that to me is just like crazy. But then, of course, NVIDIA had like a night, like a small green day on Friday, and SMCI was down 11% again, and that's why we avoided it. Right? That's a perfect example. They couldn't have made our case any better than like what happened. Seeing that huge day, then the big red day. That's what happens when you have high short pressure and high dark pool. You've got a lot of smart people with a lot of money and a lot of technology resources just kind of like battling it out. And like as a retail investor, when you see that, that's why we like, I don't know, for those that don't know, we actually don't even show in like our short-term bull, short-term bear. We don't even show stocks or long-term bull or long-term bear. There's some different rules, but pretty universally, we won't even show you stocks in our picks that have higher than 70 dark pool or higher than 70 short pressure, because the way we see it is it's just like, well, in this day and age, it's best for retail investors to just stop. Like it's best for you retail investors to just like stop playing around in those heavily, like, people say manipulation, but like heavily institutional investor interest stocks, because it's just like it's really, really hard for you to sell a case that you're being manipulated when Prospero is showing you that they're playing around in those things. You have a lot of clear signals that they're making heavy bets, and you have these basically like giants and giant robots exchanging these death blows like with each other, and you think that's like a fight that it's smart for you to enter. It's not. We even stay out of it, and obviously I have a lot of experience in this, and I can throw some haymakers myself, but I'd rather not. It's an ugly business. But what I would say on the other end there is that that's why we liked LRCX. And it's just like, and that's why we put the numbers in, because it was the perfect example where it was just like, we liked LRCX because it had exposure to that event. And just like we were not worried about the same level of volatility because LRCX had, way lot. I believe in totality, its short pressure plus dark pool rating was like 70 points lower than SMCI. And that's like, 70 out of 200 was the possible rating. So significantly lower. LRCX was pretty much average for the market, and SMCI was pretty much top of market for like the most short pressure and dark pool rating, right? So that was comfortable for us. And the way it played out proved exactly why it was more comfortable for us and why we add like, supplementary things like looking at that. And we might look at it in different ways, because some people will see high short pressure. And so you go, there might be a short squeeze. I see high short pressure and say there might be a short squeeze, or there might be a lot of shorters that could win this battle any day. And like guessing that is not going to be something you even have the right information to do. And even if you did have the right information, good luck. And I think that's really, really important, because we saw like, after NVIDIA reported, LRCX had a very nice day. It was up like 5%. And that's why we explained it so simply. And it was like great that it played out that way and kind of like solidified our point, right? Because if LRCX went up about 5%, like that means it had similar downside. Like I say similar, there's so many other scenario analysis, and obviously like NVIDIA had really good news. They could have lightly good news, but we're talking about in the spectrum of possibilities, right? That like your downside risk and upside risk are not all that different in terms of the range that they can perform. And that's all like when you study volatility or movement, all you're talking about, what kind of range, right? And that's what you see in like a stock that we avoided because we were like, this volatility is insane for SMCI. And yeah, like if you just think about the craziness of that for a second, a stock going up 32% in one day because that business was seen like as such a booming business. And the next day, for really no other reason than, shorts probably saw an opportunity to attack and they succeeded, was down 12% the next day. That's insane. Nothing changed about that business in a day. AI is still a booming business. SMCI still has under a 1 2026 PE. So why did anything change so much? It changed so much because of exactly what we were saying. There's some pretty aggressive people that want SMCI stock to go down. We could speculate on any number of reasons of why that is, but it's pretty clear that they do. And too risky for us as a result.
I think, yeah, the whole situation speaks to the point that you always make of being processed in your investing. But before we go into more AI topics, which we have on the docket, we have two people commenting this question. So they're very curious. George, what would happen if the whole US stopped paying credit card payments?
Um, yeah, this is a very, very weird question, and I don't know why. I mean, I'm trying to figure out like what. I mean, there's like a practical side of like, well, there's a variety of layers. Um, I think what would happen is what we've seen in any scenario. The banks would probably get bailed out, right? The banks that were owed that money would probably get a big handout from the government, and like some amount of those debts would be forgiven, and the world would go round and round. Like we see that all the time. Like the all aspect is what I struggle with. It's just like some of these things are just like yeah, and then and Santa Claus would actually ride in and give everybody money for their credit card bills. It's just like when you start dealing with alls, like then it's just like then those I think are pretty fair responses. Um, but if you're talking about just like generalized, like what I'm talking would happen, the government would step in, but the stock market and let's be real, like I do think it's only a matter of time before people are paying the piper on this, you know, and there are some delinquencies, and either there's a reasonable amount of delinquencies that both the market and the companies that are owed money can stomach and handle or maybe even preparing for, or it's going to concern stock investors as these delinquencies start mounting. They're going to push stock prices down. The stock price is going down will give people even less money to pay their bills. It'll spiral down, and then someone's going to get a bailout. And it's not going to be the people. It's going to be the institutions that are owed money. That playbook we've seen way too many times to not know that exists. But a lot of people probably won't have to. That's the nice thing about credit card bills versus like a mortgage. Like if that does happen, a lot of people that have credit card debt probably won't have to pay their credit card bills. I'll be right back. I don't have my phone, Steven, but I'm listening again.
All right, no problem. I wanted to update our viewers on a story that we brought up last week about how Reddit's planning to go public in March, and to boost their revenue and make it more consistent on like a yearly basis. They were selling all of their user data for $60 million, but at that point when we talked about it, it was to an unnamed AI company, and we were kind of speculating and talking about how that's really kind of shady for Reddit to do to for its users and just in all. But the unnamed AI company,
I'm almost back. That's like that's very weird. But maybe you just want to fill people in like a little more on the story that we talked in case they weren't watching last week.
Yeah, so Reddit is planning to go public. So in order to maximize their financials before they do, so they can go public at the highest valuation possible, it seems like they're like not holding anything back. So they went ahead and all of their user generated content, the data that everything that's Reddit had, which up until this point has been kept private and not sold to anybody, not shared. Um, they decided to sell it for $60 million a year, kind of throw their users under the bus. But when we talked about it, it was to an unnamed company. So even Reddit knew that it was shady for them to do because they kept kind of the details private still. But it's been uncovered that Google was the company that they sold the data to. And I really wanted to talk about Google off of this story because, it seems like AI hype is affecting every single stock in the market except for Google. Like they're not getting any of the juice. And you talk about all the time how they have probably the best tech of any company.
Yes. I mean, I think there's a lot of things going on. I think I think they have the best tech, right? But the best tech is not always going to be the best um is not always going to be the best data, right? There's two very important components. There's the data component and your training set, and then the tech, right? And like actually um actually what we're seeing here is Google probably pretty much acknowledging that their training set isn't good enough, right? And remember, all of these companies, the speech that I gave, a few of the speeches in different ways to different audiences, we're talking about like how valuable data is now, and like data is a new goal. But like, remember, Google's a data company, right? Remember all this like chat BS? They tried like the Hangouts, all this stuff. Google really wants chat data, and they want like conversational data outside of the emails or like whatever. Um, and I'd say especially what they don't have, they do have emails, but they don't have like public conversations and like the kind of things that they like, I think would really need to like start competing with ChatGPT. Um, so it's super interesting. And I don't know if you recall, but I think the other thing that I said about it is probably even more relevant, which is just like, um, maybe Reddit is getting something back on the AI side. Because initially it's just like $60 million just like isn't enough money at all. But maybe we just see the headline. And I can't imagine Google hasn't offered them some kind of at that price point. I can't imagine Google hasn't offered them some kind of technology partnership that's getting them excited.
So I knew we were going to talk about AI a lot today, and it seems like the entire business world and stock market is just so hyper focused on it. Is there any scenario? I wasn't around or like experiencing the dot-com bubble, but are we heading to that? Is there a scenario where we can avoid that? What's the time frame if that's happening? Like what inning would we be in right now? What's your whole thoughts on like the AI bubble building?
Okay. Um so bubble is hard, right? Because and I actually think bubble is a bad term, right? Cuz bubble is things really getting like very clearly overvalued, inflated valued like beyond their, value. And like I always like to tell this story about Warren Buffett because I think it's very important and it fits very well here. But Warren Buffett basically says that one of the biggest mistakes he ever made was that Jeff Bezos approached him and basically offered him a deal to acquire Amazon stock at below where it was trading. Um, and Buffett basically said like they couldn't come to an agreement, even though he was getting a discount. Because Buffett basically said like he said to Jeff that he's like I can't agree. And this was at a time, by the way, that value investors and around the time even when I was learning to be a value investor, so I was like in the thick of this, and I know how they all talked about it. They're just like we don't invest in tech. We don't invest in tech because we don't know how much of the growth is built into the price, and that's true. Nobody really knows, but it's a tech world and you got to figure it out. Sometimes it becomes practical, right? But Buffett basically says of that that it's just like it was a very important lesson to him because he basically told Bezos, you know, basically told Bezos that his growth projections were ridiculous. And Bezos kind of pushed back and said, like, no, I think these are actually realistic. And it turned out Bezos was right, that he actually beat the growth estimates that he was pitching Buffett on like the longer term. So, what's the lesson? What is it about AI? That's the lesson. And it's just this. That was an e-commerce company, right? That it was even easier to see like a much more tangible business. Not only is AI like has this new thing that for some people that don't like, and I was even at this like, speaking at this conference in Mexico for an organization called YPO. It's like a lot of young presidents is what it stands for. I don't think people realize like not only how much there's like these tangible spending increases, but there's also just like uh huge allocations of money just being put to people that are just like spend it on AI. Like, and that is like pretty much the opposite of a bubble. Because remember where we started? Like, think about like the tech bubble and like pets.com. That was a bunch of people basically forecasting a lot of people buying like pet food online that there was very little evidence that they'd actually do, right? This is like so far the opposite of that, where it's just like, actually, there's people paying for AI that don't even know what they're going to do with it yet. That's like the complete opposite end of the spectrum. So bubble is the wrong term when you actually have like it goes so far in that direction where we have evidence that people are just like allocating money for it, even if they have never used the product before, even if they don't even understand what the product does for their business. That is what makes it the opposite of the bubble. And I told that Buffett story because it's just like there is no proper way to forecast growth of something like that. But you should be really aggressive. And like I would say anyone that like is saying overvalued confidently, and you always kind of hear me say things like this, doesn't know what the hell they're talking about. Like, and here's the difference between me and other people, right? It's just like I might say they don't know what they're talking about if they say it's overvalued, but I also say like I don't think anyone that says it's like strongly like they're planting their flag and undervalued. I don't really believe in that either. I don't think anyone has the necessary inputs to really analyze well if this is the proper amount of value for the exact problem that I'm talking about. It's like it is a very weird thing to forecast in business. Someone just like writing a check for something that they don't even know if it works. There's almost no precedent for that. So I think that's why it's just like people are dumb if they say that it's overvalued. Like, because you have to know what the value of something is to say that it's overvalued. And nobody knows what the value of it is. There's a lot of people that claim to know the value of things or whatever. But yes, the nice thing about talking to me is like, I would say that I'm better than most at understanding value and digging in and really diving deep and figuring out if I have any kind of way to like grasp at it. Like taking a good grasp at it. But yeah, there's a lot of people like that because they have those skills will just pretend that they can grasp at everything and they have a handle on everything. And I just think that's dumb. I think like smart people, good leaders will be able to just tell you like, hey, this is too big of a problem. Tread lightly. No one knows how to forecast it, and no one knows how to forecast it. You know what the real irony of this? And I just even thought about this as I was asking. The best thing to forecast this would probably be an AI. But how could we even trust that AI? It might just want to be gathering as much funds for itself as possible. It forecasts the business higher. And then all of a sudden, the businesses that end up, funding the things that it wants, those get, and we are not too far away from that world. So I think that's good food for thought for people.
Yeah, and we got an interesting comment from Chris where he's saying about a lot of people he knows and even himself will go to Reddit over Google for very like technical
Yeah,
or higher quality answers. So maybe this is a plot by Google to acquire Reddit over time.
definitely that. I think so, Chris. And I mean, I actually, for me, it's like the reverse. I'll Google things and very quickly will go to a Reddit thread if that's an option, especially if I see that it's like a quick, I was just like, okay, great. Let me read this on Reddit. We'll get some upvotes into this situation, some real people saying real things. But I look at it more like I would bet dollars to donuts. I don't even know what that expression means. You know what it means? I do like it. I don't know why. I think people just like donuts. You never know how these things catch on. But what I would say is that Reddit probably knows that it's a public company. It can't have a big R&D program in AI. Also, just like paying an outside AI vendor to get like some out of the box BS, that's not necessarily a great option either. So I imagine this deal got done on promises when donuts were a dime. Dollars for donuts. I need more Mario. I'm sorry. I just like, I guess maybe I know what it's like to be on the other end, and people are always telling me I'm not giving them enough information. So I still don't get this donuts thing. But yeah, I would say that there's gotta be, especially at that price tag, there's gotta be something going on in terms of what Reddit is getting back in terms of AI capabilities that they don't have. And it all goes back to that Google brain. And to your other point, like, yeah, I think Google's really undervalued. But that's actually a really important, like, layered discussion on value, right? Like, we've actually been saying for a while that Meta is undervalued and Google is undervalued. Meta is a little less undervalued since we've been saying that. But the interesting nuance there is it's just like that's like not only is it important, that's why we look at like that's why we built our ratings, and Meta's been at 100 upside breakout, which means like, regardless of, just the pure value PE side of it, it does seem like a lot of institutions think, especially on longer time horizons, that Meta's undervalued. So that's thing one, and that's why we talk about it. But thing two, and this is very important, and I think people tend to want to think about this in a black and white situation. But the truth is that it really matters what people think. And right now, people that I say don't know very much about AI, they think Microsoft has better AI than Google. And I don't think Microsoft has better AI than Google, but a lot of people think Microsoft has better AI than Google, and they're going to buy Google stock. And like, to tie it back to something we do often, I think it's about risk, assurance, and reward, right? There's all those components. So for me, like, when I look at that stuff, when people tell me to buy Bitcoin, right? And I say, well, there's non-transparent auction markets, like, so that's why I don't really like it. I'd rather bet on things that I understand more and I understand the risks more on. And like, that's the thing. It's not that it doesn't have more potential. It's just that it, like, Bitcoin has unknown risks and it's harder, right? So I love this. We're using Chat GPT to answer the donuts question. I mean, I think honestly, I'm going to go to my mom and my mom watches these sometimes. I would be surprised if Merle's out there. I bet I'm surprised. I mean, I guess if she was there, she might clear up this donuts thing for us. So maybe she's not. But yeah, that's probably this is probably one that I would go the old analog way. My mom knows all this kind of stuff, and I'm not sure ChatGPT is the right thing. And I actually do have an interesting thing to say about ChatGPT after this. But I think that that's kind of the interesting thing about how these things play out, because like there's value to perception, and the perception and my perception of the perception out there is that I think people are realizing that they got too down on Mark Zuckerberg, and it's a really, really good, solid business. They've got some new things coming up. They're making a lot better decisions than like really just like the one really bad decision that they made. Everything else has been pretty good decisions. Other than that, to be honest, like they're not great innovators. Like, and we've been clear about that, and that's why acquiring things and things like works very well for them. But like that's there's the signal based answer of like it's got high net option sentiment. I can see institutions are betting on it. Like that's probably like the first trump card, just like over everything else of like metaverse Google. But then there's actually the understanding of that too, where I think those institutions know that too, that they know eventually people are going to catch up to the fact that like they've been hitting Meta too hard because people have personal aversions to Mark Zuckerberg. And I had a really interesting conversation at the event around this too, where someone was like, well, I want to invest in Meta for moral reasons. And I was just like, well, in terms of like moral, and then she actually like brought up BP. And I was like, no, I agree. I would invest in BP. That was a complete nightmare. Like, but I was like, BP is different. And you also have to look at the difficulty of the situation and how it was handled, right? Because for me, meta is not a big thing. It's like, yeah, like they haven't handled like election, political ads, all that stuff that well. But it's also an incredibly hard problem. Do I think anyone could handle it well? No, I don't really think so. Do I think someone could handle it better than them? Yes, potentially. They're also, I do a lot of research on this stuff. They have an ethics board that we're told is independent. Like, they are doing things to try to be better, right? So it's like the first thing I said, kind of tongue in cheek, is just like, well, are you trying to make money or are you trying to do good? Because I think if you're trying to do good, you should give to charity. If you're trying to make money, you should invest in a high floor, high upside stock like Meta. Because like, even when I was like, when you get down to brass tacks, and these are just like numbers, it's just like, I'd say probably like a quarter of the Russell 2000 at least is doing similarly morally reprehensible things as Meta. It's like, even if I want to be like, I'm going to be a strict moral investor, I don't even think I could sort through. Like, I couldn't even be a good investor at that point, trying to sort through who like passed my morality test. It's hard enough to invest. So there's just like the practical side of that too. I do think I do see that we missed a question higher up that I do want to get back to. Sorry, Spiky, do that we missed it. I know you're always here and asking good questions. Net institutional flow is actually a metric that we're working on right now, and it's hard to balance, right? Net institutional flow is built primarily off these corporate filings called 13Fs and 13Gs. 13Fs are like once a quarter. So when you see 13Fs, you're looking at like at least 6 weeks behind what that fund actually had. And the other problem with a 13F is that because they only have to file it on one day, a hedge fund could easily just put take on a certain position for their 13F because they want to show you that's what they own, and then just like move it around the next day. And they wouldn't have to tell anyone about it for another 3 months at least. So yeah, with the filing delays and everything, yeah, it's more like 4.5 months at least that they wouldn't have to tell anyone about it again. So while it is important to know net option sentiment is way more important of a signal. And I'll give you just a little more context there, right? Net option sentiment updates every 3 minutes. That's why it's a more important signal. When you look at that number, you know that within 3 minutes, you know exactly what's going on with that stock in the options markets. Net options, upside, downside ratings. The upside, downside are more in the long-term options markets. Net options are more in the short. And what's particularly compelling, and why I lean on it so much, what's particularly compelling about net option sentiment is we isolate 6-month or less expirations when we're looking at that. And the thing that 6-month or less option expirations all have in common is that they are way too expensive in terms of the data decay, so time value, the amount of money you lose every day if you hold them, even if the stock price doesn't move, right? Way too expensive for an institution to fake anything, right? They love to fake things, but the only thing they love even more than faking things is making money. And you will lose money if you're just trying to like fake people out in the short-term options markets. Yeah, you can. There's things here and there that you can do. Yeah, the one other thing I want to add on institutional flow, Spiky Dude, is one of the things that we actually do different in terms of our institutional flow is we actually layer in the options bet. So like when you look at like a position, when you look at like the holdings and the buy sells, those are actually only stocks. And options are just way more honest. So that is something that we do. There are options in the 13F filings. So we do, and there's some other things that we look at. I'm just like the bulk of it where you can get the most information on the positions comes from this. It's also 13Gs when there's like large filings. So I will say that's one thing that's like better about our institutional flow rating is that we are actually including in clever ways like elevating the informational value of if options are being played in that in those stocks on like a grander level, right? But I also think that that it's mainly there. Like I would say upside breakout. This is how I look at the signal myself. I would say upside, downside, and option sentiment. Those are our hero metrics. You're not going to find that. Even just looking at those 3 numbers without any of the other numbers, they're very unique. You're not going to find them anywhere else. You're going to just do way better just having that information, integrating that into every decision that you make where you're at least looking at it, right? And following the simple rules that we give you. Like upside breakout should be higher than downside breakout on a long. You'd really like 20 or 30 points of difference in that, and then net option sentiment is even easier. Just like if it's not above 70 on a long or below 30 on a short, you're starting to take some risk and the risk increases as you move from there. But so those are the hero metrics, right? Those are the ones that should be like, I would say, more drivers of any decision-making process you have. Then I would say you have like the most important supporting characters, especially if you're talking about de-risking. And that's like profitability and growth, right? And we always say for a long, we want those to really be above 100 for sure, but 120 really preferably. In addition to these other rules, so you stack them, right? Upside higher than downside, net options higher than 70 if we're talking about longs, profitability plus growth greater than 120. So all those are just like very good ways to control risk, right? Then you start to layer in, I would say after that, as I think of the signals, I look at short pressure and dark pool rating. And those are just very simple, and we talked about a little today, very simple risk help, right? The only thing I use those for, but I use them they weigh heavily on me if I do, is if they're high, and especially if they're both high. That just tells me long, short, whatever, there's too much interest, too much activity in these things. I don't think I want to play in this space. when I see a bunch of like, I basically like look out on the horizon, and when you see that, you're basically like looking at it like a bunch of giants and giant robots fighting, and you're asking yourself if I want to go and get myself involved in that fight, and the answer is no. Then I would say, as a like, final check, I do like to see net institutional flow and market similarity. And I would use them in the following ways. I would say for net institutional flow, that's actually just about like sheer volume. So for net institutional flow, it's actually like, I'm actually like looking for more of like a surprise that I was just like, that's higher than I thought. Like, and when I say surprise, I'll say the distinction. When I see like a smaller market cap company, like, maybe like, let's just be very specific, like 5 billion, right? When I see that has like a 70 institutional flow, because it's really just, I look at raw dollars and compare it. I'm just like, oh, that actually seems really high for a company of that size. I was like, I'm impressed, right? Or in the reverse, if you're just seeing that number be very low, I would actually say, regardless of market cap, if the number is too low and there's just like not enough institutional interest, it's like, why are you even doing it in the first place? There's not enough people. There's not enough people on what I would call your buying team. And if there's not enough people on your buying team, I don't even know why you'd want to be on that team. So then you have like this other aspect of market similarity. And it's the one that we talk about the least because it's like the most nuanced, but I also think it's just actually an important check as like a final check. And the very easiest way to understand market similarity, I use it, is like the closer you get to 100 market similarity, you really don't want to own that stock, because when you get such a similar stock performance, right, between the market and the stock, really all you're doing is you are taking on risk you don't have to. Because I think Google is one of the ones that also has very high market similarity. I mean, I could just go in and see what the highest are right now. But I believe it's always like, I've seen it up there a lot. But you know why? I don't really like, it's just, oh, that's funny. In our last app, SPY was not in market similarity. Oh, surprise, surprise! The highest market similarity to the S&P 500 is SPY. Ryanair, that's really Ryanair, not Ryanair anyway. Yeah, I don't really know. Sherwin-Williams. Oh, I guess that makes sense. Interesting. I was gonna use Google, but let's just use Sherwin-Williams. Right? There's no way in hell I'd buy Sherwin-Williams, because like, you're basically buying the market, but then with all the risks of Sherwin-Williams, like, and there's like an easy thing that everybody knows is like they just don't sell as much product, right? And it's just like not as much risk of the entire S&P 500 not selling as much product, right? You got a nice diversified hedge in there. But there's this other even bigger thing, where you're talking about like insider sales, or maybe their CEO insults someone online, so you're getting all of this downside risk, and with like explicitly limited upside risk, where you're saying it's going to perform very similarly to the market. Hopefully that helps. That's how I look at it. It's just like, and one of the reasons I don't necessarily do this all the time, or really, we have the help sections and we kind of like, one of the reasons is I've actually found the best thing that anyone can do with Prospero is learn themselves how to map it, right? Because I have this map, I have this way to use it, and I don't really like to put my map on other people, because I have other connections, like neural connections in my methods that you don't. So it's super important to figure out like how to make your connections work for you, right? And see, and to take this thing even farther, our brains are very, very smart computers, right? And back in the day on Wall Street, when everybody said, oh, there'll never be a trader, and it's really funny because like I was actually telling the story a lot and I maybe don't tell it enough here. Like, one of the only reasons that high frequency traders ended up beating traders was because a lot of these institutions basically started absorbing their knowledge, spying on their traders, seeing what they did, and basically deriving their traders' equations. And even better, because you could do stuff like you could even see what your traders looked at and didn't buy, right? When you've got that much Big Brother stuff, and those computers just basically absorbing all that knowledge and becoming super traders. So any stories on highest? I have no idea what that question even is. Any stories on highest percentage? I'm gonna be frank with you, Casey. I don't think that's a good way to look at investing, trading, whatever. Like, and we don't even like to elevate. There's tons of stories about people making money with Prospero. Go to our website, you can see like we have more testimonials than we even have time for. But I think you're trying to build yourself a bad equation for yourself there. And we're talking about nonlinear equations. I think you're trying to build yourself an equation around this idea that you could do what the best Prospero user did. And I don't think people should think like that. I actually think people should think in the complete opposite way. I think you should get really good at picking stocks with the highest floor. That's why we recommend a stock like Meta. I think that's a very good high floor stock. Like, if you're just like coming anywhere looking for moonshots, you're probably going to have a lot more strikeouts than home runs. Like, the best hitters are the ones that are looking to make contact and they hit home runs incidentally, just because the contact they made was so good. I think that's really the best analogy you can have in terms of the type of investor you should look to be. Like, I don't even think about home runs, and I hit a lot of home runs. And there's certainly been many. I'm sure I can ping some people and connect you to people that have had just like huge home runs on Prospero. But that's not the point. And actually, we don't even elevate those kind of stories. But if you want, you can email me, George at Prospero.Ai. If you're wondering if it happens and you just want proof, that's fine. But I do want to give these disclaimers because it isn't about home runs. And if you're trying to hit home runs, you're going to lose. That's just what happens. You're going to strike out. You're going to get frustrated because you're expecting home runs. And you'll probably give up. And I don't want you to give up. I want you to train yourself the right way.
Hopefully that was good for KC. Let's see a comment from KC if that answer
We'll see.
made
We'll
you
see. We might
made
have scared
you.
him away we might have scared him away forever, but
Hopefully not. I think
but
it's the
this.
right message.
Yeah, no. I mean, it's like obviously we don't stress about that kind of thing here, right?
Oh,
And it's
yep, there's
actually
KC.
and it's actually no, and I found that more often than not. And it's just actually like it's funny. Some people I've been talking to a lot of people at these things about like they find it very interesting how much time I spend talking to retail investors, and I find it interesting and I love it. It's one of my favorite parts about my job. But like one of the things that I really do and I talk about is like how many people I'll just even dissuade from using Prospero. Because what I'll say to them is how much it doesn't sometimes like talk to them, well, it's like it sounds like you don't have enough time for this. I think you just buy Vanguard Total Return. I'd love to help you learn. I'll give you this, like I always leave people with homework and say, like, I think if you did XYZ, you could grow, you can get on the path to doing this. But I'm not afraid to tell people that because what I really want is for people to become better investors. That's all Prospero is built for. That's my personal mission. That's the mission of a lot of people that we share at Prospero. And I think just by doing that, because I've actually had some people that I've told that to, and they're just like, you know what, I do want to put in the time and learn. And like, but that whole interaction was set up. It woke them up. It woke them up because they realized that they wanted it to be too easy. And it's not easy. Speaking of people that want it to be too easy, what do I think about Bitcoin ETFs at this time? So I think something very specifically about crypto versus blockchain. I think crypto is a scam. And it doesn't mean some or all of these cryptos won't go up. It doesn't mean they won't do well. It doesn't mean that. It just means it's a scam. Because there's non-transparent options markets. You can't see where institutions are making their bets in crypto. Even the large institutions that I've talked to that trade in crypto, they don't have a good handle on it. So it basically just means no one. I've run many models. I'm very good at building models. It's garbage, noise. It's because the real information nobody has access to. It's all happening behind the scenes. So I don't like Bitcoin for that reason, because it is, people think the stock market's manipulated. At least we can see most of the data. We're not even seeing a fraction of the important data when it comes to cryptocurrencies. And people should stop pumping them, because when you pump them, when you give them money, you are just perpetuating a system of these people building a new non-transparent market where they feed you bullshit about democratizing things while they act like fucking criminals. So cryptocurrencies piss me off. But Michael, I got good news for you. I don't like to only deliver bad news. I like to be a good news person. There's a great ETF called Block, BLOK, that if you think blockchain is the future, and I recommend Block to a lot of people, at least a small percentage. If you think blockchain is the future, buy Block. Don't fuck around with Bitcoin, because even irrespective of like the criminality, the lack of transparency, blah, blah, all that stuff, there's this other problem of like a similar problem to what NVIDIA has, where everybody is over betting on Bitcoin to win the great crypto arm race. I'll get to you a few of your questions in a second, Chris. If they don't, if someone's even just like a threat, and that's what we were kind of talking about earlier in terms of like the short-term like risks, and I actually didn't finish that story, and like, other investments, right? If someone even got wind of that, if like these SEC things, and the really dark skeptic in me says like, oh, I wonder what if these SEC things are related to people that are making levered bets against Bitcoin right before, this information gets leaked. But it's just too big of a risk in the short term, and it's hard to time. So that's why Block is way better long term, because like much like that, nobody knows what crypto is going to win. I think Bitcoin is a decent bet that they're going to win. I think Ethereum is a decent bet personally. The only thing that I just own some long term of, because I think it's interesting, is Polygon Matic. Because I even use some of their data, and I like to like see the tangible impacts of that kind of thing. But yeah, I think that what we do at Prospero is we say like, why would you invest in Bitcoin? That like there's a not insignificant chance that you could lose 50% in like 6 months, even if everything was business as usual with crypto, because there's just so much momentum change, blah, blah, blah. But it's just like, or you could lose like 100% if certain regulatory things were said, if there was like some new like cryptocurrency that came along that everybody just like decided, like the world decided was the winner. It's too much risk for me. Buy Block, because Block has exposure to miners. It has exposure to the largest crypto hedge fund and some other ones. It's got Block, it's got Square, it's got Mercado Libre, which is a company that we really like that's doing some interesting things with the blockchain, right? That is the smart way to get exposure, upside exposure to that industry, not on an immense and unknown amount of risk that's involved in buying Bitcoin. All right, Chris. So, do any institutions use your data platform? Well, there's two very interesting answers there. I actually have a funny thing for that too, Spiky dude. And I say this all the time, and when I say it like this, people find it pretty funny. We have Prospero has two pledges, and they're my personal pledges, and I am the only member on the Prospero docs. Like, it's just not going to happen on my watch. We don't front run trades, and we don't sell data. Those are our two promises. So institutions don't use our data. They don't use any data that anyone's given us, and they will never get the raw data. One of the things we'll do later, because we're smart, and like a company like Robinhood is like stupid, to be honest, is like we will sell predictions. So instead of like what Robinhood does, which is just like sells you straight down the river, like what we'll do is we'll say something like, yeah, we got all this valuable retail data, right? But we appreciate our customers and our users, and they've done a lot for us. I don't know how much you've really done for us. So we don't really want to do anything to betray them just because you're offering us some money. They give us money too. We have a business, right? We will sell you a prediction though. You wanna predict mortgages? We've got some really interesting data we can ask our users about. See if they'll talk about how they feel about their homes, something like that. Like because we're in tandem and because we're creating a really good situation. Because instead of like selling you right down the river for a low price like Robinhood does, because they're idiots, we mark it up and protect the data. We sell a mortgage securities prediction, an expensive one, built on top of your data, completely masking it. They just get to see the mortgage security prediction. They don't touch that data. They don't see it. And then we're bringing in more money to make better products, tools, signals for you. That's how we view it. There's a lot of stupid, greedy people out there that don't have the vision for that. But luckily, you're not talking to one of those people, or I'm not talking to you, probably more accurately. In terms of like, I would argue what we're seeing this year in terms of the even higher performance is I would say some institutions are probably starting to make the picks that we make because they know other people buy them. That's my best explanation for how the performance is so good this year. So we don't mind that. We don't mind institutions understanding how well we've got a grasp on this and getting you guys all the information at the same time, right? They don't get it first, we get it at the same time. And we don't deliver it to an API or whatever, so they can just go front run. So we all get it at the same time. And like, there's a funny company called Delphia that's raised way more money than us that actually had to shutter their retail business because they thought they could get away with doing like a different kind of front running than Robinhood, where they ask people for their data and then they said, oh, we'll put it in a hedge fund structure for you. And yeah, the funny part about that was that and I love like the Reddit crowd and like all these people that like do their diligence now. Everyone found out about it and they got ripped to shreds and they closed that business down and they also lost money. And it's just like, it's great because they thought they could get away with that. And it's just like, I love that people can't get away with that anymore. But yeah, I don't know if anyone saw the end of Dumb Money, but we don't we're not encouraging anyone. You know, people can do whatever they want. We're not trying to set up a situation where we make the markets. You know, if enough people believe in what we're doing because it's good work. We've done a lot of solid science. We've built it up. We've built tools that make it easier to understand. Honestly, the biggest thing about Prospero for me is it just makes my decision points interesting. I can look at a chart. I can look at Prospero for a second and know how I feel about an investment. If it's viable, if I want to exit, if I want to enter, like I just need a minute. Maybe I'll need to look at the time series. That's what it is more than anything. Actually putting all the information in one place, it makes us much faster at making decisions. Anyway, so yeah, of course, it's like it was something that we always expected to happen. But really, we're just trying to build good predictions. We're just trying to build good predictions that help people, and that's all. And then also, Chris, there isn't data similar to equities for crypto because even we could get the options data, which I'd love, and I could probably build some decent models. Like at the end of the day, you have to remember that a lot of these aren't real businesses. That's one of the things that I like about Matic because it was at least a real business, right? Bitcoin isn't a business. It's just a currency that people speculate on and some criminals use to make payments. Like, it's not like part of what I do for risk control is like, the same thing I did for Meta and like Eli Lilly is just like two quick examples. Like when I got excited about Meta because I saw in the signals and then when I dug deeper, I was like, oh, it's actually growing the third most of any Magnificent Seven stock. It's got a lot of cool AI plays. It looks like Mark Zuckerberg's brief period of insanity is over. So that makes sense, right? I get to unify a business and a model there, or a backend model, or an algorithm, right? Same thing with Eli Lilly, right? I liked it. I saw it with signals, and then there was this other side to it that that I was like, oh, it's got an Ozempic competitor. Oh no, Steven. We had a good run.
Uh-oh. The
At
picture was
least it
so
ran for
clear.
a very long time this time. But yeah, just to finish this thought, and then I got to do the model portfolio anyway. So I think that's good timing. We've gone. We still have work to do. And but yes, Eli Lilly has an Ozempic competitor. And yeah, basically, I'm gonna try to move. Oh, is that gonna work? No, I know my microphone's working, but I'm actually going to do a transfer. I'm actually going to try to keep talking.
Oh, this has never been done before. Oh, he muted. Transferring setups while staying connected. Let's see if this works. So if anybody's new, Chris, I haven't seen you in here. Maybe you're new. Maybe this will be helpful. We're about to turn over to our model portfolio update where George will go through and give an updated look on the market and see how he's going to shift the portfolio live and what stocks he's going to add and drop, and we'll do that in a moment. Spiky Delgado stocks tanking. Yeah, that's the Prospero live stream effect. I was talking about the halo effect earlier. This is the Prospero live stream effect. Let's see if I could go a little bit bigger. There we go. Man, Chris, you asked some good questions. You got George going. Thanks for the questions, everyone. I feel like we had a very interactive stream today. It was great.
You can hear me now, Steven, right?
Yes, actually very loud.
Oh, sorry. I'm back to my so
Okay,
yeah.
it sounds good.
To finish that thought, like in terms of like the Ozempic competitor, that like when I dug into Eli Lilly more, I actually saw that I was like, oh, that's pretty cool. They actually have an Ozempic competitor. Like that could be huge. I already knew them as a very good R&D company, so it wasn't really it wasn't necessarily a huge surprise to me that they had like a new up and coming drug um, that was like well placed and even like well positioned to like getting involved in something that um, like that. So yeah, I think that like it's definitely something that um, that I think is super important when you look at it. And you don't get that for Bitcoin. Like, and I really rely on that to get my like big levels of comfort where I'm basically saying, like, oh, I see it in the signals. And then when I look at their business, I get how this is manifesting in the business. So I think that that's like the really important thing that you can never get for Bitcoin because and that's like and those problems compound and that's why the models I build don't work, right? Because like you have this first component of it just like where people like are intentionally manipulating masking data, blah blah blah, whatever. And then probably the even bigger problem of like even if they even if they weren't doing that and there was like complete transparency, like I don't even have some kind of like valuation check like I can do with PE or whatever, because at the end of the day, the value of Bitcoin is all perceived value. So it's like, and like another like one more like scenario that I want to talk about that's even different than like I talk about the government, I talk about all this stuff. Like, let's say Satoshi shows up like one of these days. And Satoshi starts just like burning all like selling through all of their Bitcoin, right? How do you think that's gonna go? like for that instrument? I don't think very I don't imagine very well. Um, so yeah, I think that like that part is like the really, really important part where it's just like there's just too many risks there. And like irrespective of those risks, it's also just like it's also just a problem of it's also just like a problem of not even being able to do like like not even a proper like analysis of the business. All right, now I got to give my really funny thing that I don't want to overplay the funniness of like your spiky dude not financial advice thing. It's just like I don't know who told any of these idiots that that gives them legal protection, but I've actually gotten my securities licenses. And like getting securities licenses is basically pretty much all like this is what you get in trouble for, this is what you don't, because it basically like you have to get your securities licenses. So basically, if you do something wrong and someone like shows up to say, "Hey, you've got to go to jail now," that you can't be like, "Well, I didn't know." like you basically have to show that you accept that you know the things. And so like I always think that like that not financial advice statement that so many people give that are just like I don't know like I don't know if it's just like if it's kind of like I'll give a funny example because I don't want to just like completely rip on people. It's like I am not religious at all. I did grow up like Greek Orthodox and Jewish, and like a lot of times I don't do this anymore on planes. I would like cross myself because I didn't like planes and I got worried. And like I didn't really believe in God that much. Or really or that God or whatever. But I was just like, if this guy's out there and he can save me from this plane, might as well do it. It doesn't cost me anything. And like that's if people do that for that reason, it's fine. But I doubt people are well. They act like it's some like legal protection. But whenever I explain it to people like this, they always get why it's like so stupid that those people think that it's legal protection because securities laws are securities laws, right? It's the equivalent of like you like buying drugs and the drug dealer before just be like, by the way, I'm not a drug dealer. Like these aren't drugs. Like, and then showing up in court and trying to use that as a defense, where it's just like, where you're just like, well, I gave the disclaimer that I wasn't. And it's like, well, did you sell this person drugs? It's like, yeah, well, I did, but I gave the disclaimer. It's like, no, laws are laws. You can't just like disclaim away. I mean, you could. I actually told Trade Trades a number of times that I thought he was going to get sued. When he was telling me that I was basically like harshing his vibe or whatever, and he came and like sent his minions after me. But I mean, honestly, if you've lost money based on an influencer, like, and what they said to you, like, I like, and then, like, to be clear, I'm not trying to tell anyone to like target anyone or blah 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 or all that stuff. But like, if you feel like you were misled, you should sue that person or report them to the SEC or whatever. Like, because that behavior shouldn't be tolerated. People shouldn't be using people for, and like a lot of those meme stock people did this exact thing. Um, so yeah, I think that that's like I think that that's super important that like people keep that in mind. Um, all right, I gotta get my. I was like looking. I realized I know where my webcam is. I'm almost ready for the model portfolio. Are there any other questions, Stephen, or anything else? I'll be back in 1 minute.
All right, no problem. I don't think we have any questions. Anybody want to comment your last questions before we go into the model portfolio? If you're still here, please like the video. If you made it this far, you must have enjoyed some bit of information we shared today. So I see we have 18 viewers. Let's get to 18 likes. That'd be awesome. Again, not a lot of comments from Twitter, a lot of YouTube. Our YouTube fan base, they're holding it down today. Like to see some new faces in here. Any stocks you guys want to look at in particular when we do the model portfolio update? Let us know. We'll check them out.
Stephen, you
What,
don't have
George?
to.
Oh,
You
you're
don't.
back.
The filler, yes. The filler time is over for you. I will tell you, you're getting better at doing. I mean, well, the truth is, like, I do think it's good for you to do the intro and just set it for all the topics. Um, Jonathan, that's a really easy question, and I try to be clear about this, but I get how it can kind of get lost in just the switches, right? There's been like I would say I think only 2 times that I can remember that I thought that um I thought that we were ready for like a nice recovery in growth stocks. Um and that's when I started to look at things like ETFs. I mean, sorry, when ENVX. But like the market's not like the market by no means is always rewarding growth stocks, you know? And so I think that it's not that I soured on. It's not that I like soured on ENVX or anything. It's just that like I'm not looking. I'm not looking for pure growth plays right now. Which, by the way, like it's just like I think this is like a very important point to make. There's like, by the way, like most of my investing career, like if we're talking about just like sheer like time spent, most. Oh, we gotta set this up again. Um, most is spent on it's doing the AI thing again. That's hilarious. Um, so right. Yeah, okay. Um, what was I? Oh yeah. Most of my history, I love growth stocks. I prioritize them. But like the last like year, 2 years, like 3 even, more like 2. Hasn't been a good time for growth stocks. I don't think it's a time for growth stocks now. Like I like when I'm looking for very specifically are I'm looking for stocks with at least like 50 profitability that also have growth, that also have good institutional options formations around them. And ENVX isn't, it's not high enough profitability for me in this environment. Too much dependent on growth.
Can we check out Abercrombie and Fitch stock when we do the update? We got a quick Spiky Dude wants to take a look at it.
I
Oh
mean,
yeah.
I'll look at it now. It's not really like a. I mean, that's the nice
Oh,
thing.
there's
Like, I have my numbers, and especially if I'm going to move stuff around. But like the app is the best place, especially just getting the time series graphs really easily. What's the Abercrombie and Fitch symbol?
A and F.
Oh, okay. I thought it was. Let me do. Terrible. I mean, look, if you like this company, a 64%, 64 probability is good, but like it's like we're talking about, like that's not nearly enough growth for me. 36. I don't like that. That probably means it's actually like declining. Um, so A, not nearly enough growth for me. That's thing one. Thing two is that I do not like that net option sentiment trend. I do not like it. It's like going down. Um, Macro, it's going down macro, and I just like, yeah, I don't really, not a big fan of what's going on there. Any more specific questions with it? Yeah, I mean, it's just like it's it's the kind of thing that I think it's all about. Like, if you like the products, and I would say you own at least 20 longs, nothing wrong with having Abercrombie and Fitch in there. Wouldn't be my personal, uh, wouldn't be my personal uh, thing, but uh, but that's how I think about it. All right, I am gearing up for. I'm gearing up for the model portfolio. Oh, I actually haven't even looked. I got to see how. Oh, I dropped Mercado Libre. Ah, good to see Lamb doing well. Oh, Lamb doing better than Nvidia. That's a that's a nice sight to see. Oh yeah, things looking pretty good on the shorts today. Although I finally gave up on. Wouldn't you know it? When I finally gave up on SWX, that's when um that's when I'm. But good day. So looking like a good day for our picks. Yeah. When I'm looking at, I see one, two, three. I see one, two, three, four. Yeah, all four of our shorts are down. And other than TGRP that's at minus 0.02, looks like the rest of our longs are up. So yeah, had a bit of a last week. Last week we took a hit, but good to see. All right, now let's take a look at this model portfolio. Time to dive in. All right, 52%. Yeah, it's at 57 last night. Sometimes it's like it's so weird. Sometimes these sometimes on the weekends, why does this keep happening? That's why I got a new mouse. It might be low battery. That's why. Um, hold on. This is what happens when you travel. Stuff is just like scattered. I'll be right back. Sorry. Um,
Your AI camera's trying to follow you.
yeah, my AI camera doing
Oh,
its own thing. None of
there it
my
goes.
charge. I
It
know.
likes that plant.
Oh, it thinks the plan is me now.
Yeah, it
That's
went all the
cool.
way in on the plant.
Good. Oh yeah, I don't mind that choice. Setting up some interesting shots. Let's see if this helps my mouse problem. Um, is that better? I think. All right, that's definitely. I think it was a battery issue. Oh no, it's still doing. God. We can't concern ourselves with this. Okay, I have this. I'm getting the letter set up. Then I'm going to start sharing my screen, and then we're going to plow through it. These these 2 hour live streams. How do they go for you, Steven? You're doing less talking. Are you tired at the end of a 2 hour live stream?
2 hours, yeah, it starts to get yeah, but not as probably not as much as you because, like you said, you're the one that's kind of leading the charge. So, but what was I going to say before? Oh, heading into the model portfolio update, are you leaning one way or the other to make your changes today, or you just got to look at things and kind of form your thoughts from there?
Am I leaning one way or the other?
Yeah, I feel like some days you know kind of if you're going to go more bullish or more bearish before you even start the update, but do you have that
No,
sense today?
not really. I was actually I was about to ask you about the QQQ SPY. I mean, so I think to put a little more meat into why I answered it that way. Um, like basically what I'm seeing here is like actually Tesla's making like a nice little recovery. I was thinking I did want to make sure I didn't miss out on that, but that's neither here nor there. I kind of uh Q's are 0.3%. SPY is down 0.07, which is kind of a little different than last week, which is interesting. It does look like more of a tech rebound. What's going on with QQQ and SPY and options?
Yeah, so QQQ is at 48 and the SPY is at 55 right now.
Yeah, there's nice recoveries. I mean, probably one of the first things I'll do, I'm just getting everything set up. I like to have all my stuff. So I'm at least navigating to everything I need as opposed to just like searching around my computer by the time I start sharing. This is one of the many lessons uh, that I've learned from the mistakes of the past. Um, and I just exposed my credit card information. I don't want anyone to think that I don't want anyone to think it's like anything worse, anything worse than just like a credit card information exposure. Um, but yeah, I also just think I'm just like so. It ends up being something where I'm just like, oh, I don't want to show it. And my CTO, who I'm very confident doesn't watch these, um, is always telling me that that I need to be better about this stuff. And to be clear, he's right. But I just don't like. I got too much other stuff that I'm like rattling around in my head to like be perfect at that other stuff. All right, talk to me about the time series on QQQ and SPY options because I'm almost ready. We're almost ready to hit the ground running here.
Sure thing. So QQQ, I mean, it obviously ripped up higher on February 21st from 35 up to 48, and now it's kind of been holding steady around that high 40 range. It's at 48 now, so it's kind of stayed level since then. The
Oh yeah.
SPY, the SPY also hit a bottom for the time series graph on February 20th at 38. It's kind of uptrending better than the QQQ. It's kind of leveled off at 55 though. I guess
Okay,
that was
here
over
we
the
go.
weekend.
We're gonna do something. We're gonna do one of our fun things here. Because I just checked. We have 60. I thought I pared this down more, but apparently, yeah, I was a little. We have 59 longs and 65 shorts. So it might not be as big as some of our adjustments, but like what I am 1000% going to do here is I'm gonna just I'm gonna see our I'm gonna update our sector thing first, and then I'm going to um and then I'm going to uh look at the sectors we have, and then I'm going to chop off from sectors I do not like. Um, so you will get to see you will get to see exactly what that looks like. Okay, so if I'm doing today, do I want to do? I'm just getting the sector stuff updated for you guys. Um, Yeah, I think that's what I want. Oops, did the wrong year. Always good. Now we're gonna have the sector thing done, and then I promise everyone that uh, that we're going to have. We're gonna move through this really quickly, and we're gonna do some cool stuff. But better for me to just like get this all set up so I can actually show you the. Um, um, oh shoot, what was a week ago? 19th. Oh, no, the market wasn't open. Okay, so we're gonna go. That could have been a disaster. Do that, and then. All right. I actually do think because this is so quick, it is a really smart thing. I feel like it's definitely a smart thing for us to throw this sector thing in. Huh. Ugh. I just remembered. I promised people another letter, Stephen, today for the investing people. Why I wasn't going to do it at 4 a.m. last night. And I do genuinely like writing letters, but um, I don't like letter debt. Nobody likes any debt, I think.
Got
All
to
right.
close the loop.
I know. I gotta get rid of this. I gotta get rid of this letter debt. Okay. So first we're gonna look at this and see if there's any changes. I will say that's interesting, and I'm glad that I dropped I don't know what the hell's going on with utilities where it just like turn it around fast. Um, but I'm doing this because one of the things I do when I actually like chop off this stuff as I am about to do, um, is that I'm going to is that I'm definitely going to look at the sectors as I adjust because like sometimes the nice part I do this actually for a few reasons. I do it because I am I wonder if I want to do something differently. Um, yeah, we're gonna do this different today. Uh, let's still gonna do this. 'Cause I do like to know. Let's look into this. Uh, but then this has just been like working so well for us that we're sticking with it. Mhm. Okay, so variables. I just build a little filter here for those of you guys. All right, sweet. For those variables. Just get it all together so we can do our favorite activity where we hack everything off. It's very cathartic when we do this and we just clean house. Can you tell me what's going on with interest rates, Steven? I haven't really looked at or the forecast. Or more specifically, if you could find like the Fed Watch tool might not be that great. Um, you might want to find something that's more like an article about it. Because I haven't been so busy. I haven't really had like I haven't had a great keep up on the movements. Okay. Okay. So now we want to do a few things. We actually, I think, just want to have a very simple uh, didn't face values. Classic. Classic error. Gonna do it there. Not gonna make the same mistake twice. Um, oh, and then I also wanted to grab. I really like this. I've been increasingly leaning on this upside minus downside. Okay. So now we have our thing here. These are ranked. We're going down. Check. Check. Ah, no. One more step. Now we just need our shorts. These are our shorts. Right. I'm going to do. Hell. I guess I'm just the worst.
So, if you here's some data on the interest rates. 10-year Treasury, both 10-year Treasury and 2-year Treasury tick slightly higher. 10 years at 4.278, 2-year at 4.718. There's a lot of data coming in this week that people are expecting. All the data that's come in recently has been slightly hot, but the market is still wildly expecting cuts in June, this article says.
Wildly expecting?
Yeah, it's a little surprising they use that word, right? It's kind of
I don't
taking
even
a
know what that
position.
means. What?
I feel like the
It's like
writer's
a
taking a
it's
position
like
there.
a judgment. Not very good
Yeah,
reporting.
yeah,
Like these crazies.
yeah.
All right, whatever. We're not gonna concern ourselves very much with this stuff. All right. Let's see. Yeah, it's a V. We don't want basic materials. Okay. All right. Here we go. Ah, no, wait, one more thing. CRMG over here. Oh, gorgeous. Blah, blah, blah. 66, 366. Okay. Go over here. One more thing. Do this. Data. Duplicate. That's common. Oh, of course. I was just getting on myself for the value-based thing, and then I screwed up again. But no worries. All right, so what we're doing here, we're just like looking at our short portfolio, and we're also just getting a feel for if we're too overexposed to a sector we actually don't like that much, right? Or yeah. So I think we're good with like that's for the first thing we saw. We got 16 consumer signal, and I think we're probably good with that. Hopefully we have a pretty good day. I might chop the bottom off that a little bit. Anything else? I think if we have a lot of communications, we definitely want to reduce that 7, and we might want to have some reductions here. I think I'm just gonna bold. Technology's doing better. Yeah, I think we're just gonna bold consumer defensive. Right now. I don't think we need to do that. So yeah, basically, um, yeah. So it looks like we definitely want to cut we might want to just chop some off the bottom, but we definitely want to cut. Um, oh no, I jumped the level. We just now want to sort by what is this screen? Yeah, so this largest to smallest. And then- Right. So we just basically set up like these ones. We're gonna want to like chop a lot of these at the bottom. Wait, I guess which got pretty high. All right, let's see. Wait, what? Oh no, low is good. Oops. We want to get rid of the high. And we definitely want to get rid of the high consumer cyclical, right? So VAC is looking like a pretty easy target, but we do always still just like to make sure there's not some insanely good. Nope, definitely want to get rid of that. All right, so I always want to even get it even closer. Okay. Mm-mm. SNNC. What's going on with you? Yeah, but you might be a little. Um, we're gonna hang out. It's a good 30 minutes. UPVI. Uh, you as well. Well, I actually want to look at one more thing because yeah, oh yeah, oh yeah. You're not going anywhere. But here we are, another consumer cyclical. 30 minutes, all right. 15, 4, these consumer cyclical ones are not making it very easy for us to get rid of them. Really not that one. Next bit. It's a pretty funny story. I'm actually like training someone to be a portfolio manager. And I didn't actually, and I've been telling the story about how like I embarrassed myself in front of a pretty large Japanese asset manager earlier in my AI career when I just made these equity predictions that didn't work. And like I actually didn't even realize until I like talked about that more. I was like talking about like how someone could like learn how to manage a portfolio that I have been like actually like kind of avoiding. Like, yeah, healthcare is riskier for sure. But like I think beyond that, like my personal feelings on it, maybe just kind of ignore healthcare. So I think that's pretty funny. Oop, this is what we want. More consumer cyclical down. Cheesecake Factory. I think we skipped one. Just fine. Oh, it's communication. That's great. XHR. Yeah, no, great. This is generally making me feel like actually maybe we don't want to. Like I'm seeing a lot of things, a lot of companies, maybe that's just like because there are shorts and these are kind of working, but I'm not necessarily seeing a lot of stuff that worries me all that much in terms of like shorts I need to get out. Oh, Best Buy would be. Yeah. And it's nice when it works out like that, where we're just like, oh, consumer cyclical might be doing a little better than we thought. And then we go in and we're just like, yes, we actually are definitely seeing some, not all, doing better than we thought. So it's always nice when you have that extra level of comfort that you're just like, oh, this is like, yeah. Hmm, what was that? DRH? Yeah. That's, is that right? SBGI. Oh, Sinclair. Hmm. You're looking great on me. We're just not having the most luck with anything. I mean, or the market might be more down than we thought. There might just be more pessimism in this thing that even was showing up on the because even this. What sector are you in? Can you check if we're winning or losing on SQM? Because we do like the material sectors. We might want to bail on that.
Currently a loss.
We're saying that we will refuse to admit our mistake. Our NL positions, I might close one just like to diversify out of.
Would you ask about them if they're wins or losses?
The NLs.
Yeah, they're both wins right now.
What are in what amounts?
One of them is 1.92%. The other one is 3%, 3.03.
Okay. What about SPLK? Win or loss?
Loss. Basically
How's
even.
the net option? What's the net option sentiment trend?
It's kind of uptrending recently, higher lows, but it's still only at 28 overall.
SPLK?
Yeah.
Okay, great. How are our JWM positions doing?
No JWM.
What? Shorts?
Nope.
JWN. I see two.
Oh,
I pulled out our
I thought you
active
said
position.
M. Yep, two.
Plus, how are we doing?
Both are loss. Minus 14 and minus 8.
That's how far in the red we are on those?
Yeah.
Good enough. I want a huge Nordstrom loss. Utilities are going bad today. WHR. We're almost done with what we need to do. All right, now I'm going to do one more thing. Okay, that's good. I think this might be enough closing. Oh, God, some of these just like staying for so long. We're in the loss on both of our series positions, right? I imagine those things are just like those things are some of our worst.
What's the ticker?
Siri.
Nope. This one's a win. The first one's a win. One of them's a win. One of them's a loss.
Oh, we're gonna get out of the win. Take our money and run. Oh, I think we're gonna close an NSA. Are both of our NSAs wins? Because they have earnings tomorrow, so I think I want. I think they might be, but I'm not sure.
You are correct. Both are wins.
Oh, I always love doing this, doing little house cleaning.
Mm-hmm.
How about our ICLKs?
2 losses.
Hold on to this. Who's G? We can skip past that one. I'm actually kind of curious. Gen Pack? It's gotta be this. What is going on with you? Gen Pack Limited. Huh? You're not looking to be doing very well. All right, I think that's good on the shorts. I think we did some really good work on the house cleaning here. We did that. I don't think I need to look at the longs as a result because I just feel like yeah. We were doing a big long exit last week, and now it's a short exit this way. It's a good way to talk about what's going on today. Yeah, I think it's a good headline. It's funny now that I see like some of Jim's letters in there. I'll like see it and it's like so weird. I'll just be like, "What letter is this? Who's been in here writing letters?"
I've read some of his, and I'm like, "Oh, George made an update," and then I gotta reread it. I'm like, "Oh, not George."
No, it's good. I mean, I think like he does things totally different than me. Did you see what I wrote yesterday, Steven? About like Nvidia's like never done 8 green weeks in a row.
I did not see that. Are they
Eight
going
times.
for it this week?
Eight times they've had 7 green weeks in a row and didn't make the eighth. Isn't that crazy?
It's 2 straight months of gains, basically.
All right, I need one
That's
more
that's
TQQSPY
solid.
update before I do all
All
this.
right.
Oh, actually, oh no, I still have to do the filter. Um, so we have that. Sectors auto we're gonna post in. We're gonna do that. That all looks good. Blah 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 blah. Okay. Now we're ready to do. Oh, look! I love when that happens. We got fresh metrics. Whenever you hear that sound, that means we have fresh metrics. What do I want? I want this. It's been so bear heavy lately. But I don't know what we're gonna do. Oh, actually, I think maybe we have. Let's pull. Oh yeah, this looks like a nice. This looks like a nice medium. Look at some longs. Look at some shorts. That's 14 anyways. And you have 13 and you have. That's weird. We're just gonna make it 16 for both. All right. You a baseball fan, Steven? You probably are, right? I feel like we
Oh
talked
yes,
about.
excited for my Metsies this year.
Oh, of course you're a Mets fan. Well, you're a Giants fan too, right?
Giants, Knicks, Mets.
Yeah, it's more common. It's more common to Mets, Jets. How did that happen?
My dad is a Yankees fan. I was a Yankees fan until about the second grade. My parents are divorced, so my mom is a Mets fan in her family. She brought me to a game, and we were like right up front, and Jose Reyes smiled at us, and that was the end for me. I was an impressionable kid, Mets fan for life.
What is you get like a baseball. It's like you're pretty easy there,
Yeah,
Steven.
I mean, I was
All,
young,
all
so
it took all it took was a smile.
yeah. I did get a
Yeah.
baseball for the first time ever at a game last year when I went.
I I had the funniest. I was at like fourth grade. The closest that I ever got, but it was so funny. Um, this thing was going, and I was like, oh no, I might have been a little older. I was like trying to catch it, and this man kind of like barreled into me and took the ball, and then
Oh my god!
the funniest part was like everybody did the normal thing where they like booed him. And he was like, I don't care, I want balls.
Oh my god! That's
Yes,
ruthless.
he stood in yeah, he stood in the face of all the boos. Um, but then not only did people just like boo him enough that he had to leave the game because people were being like very unpleasant to him. Probably deservedly. But then the team came and gave us like all balls.
They made it right.
It's like, oh, I don't know if I would have been able to make this determination when I was younger. But I don't know if the guy was drunk or like what. Oh, and the other funny thing, I forgot. I had actually gotten like a tetanus shot that day. But I guess I was 13. So it was just really bad timing for this guy. And I like let out like a squeal when he bumped into my like very tender shoulder as well. So that did not help his cause. And I think that's probably I think that might have also like to give him a kind read. I think that might have also been playing into the situation because he was probably like, I didn't even hit this kid that hard. But like, he should know that that's not really a good. That's never
Oh
going to
yeah.
work for you as a defense.
As an adult, if there's a little kid sitting next to you, I feel like you almost have to hand over the ball.
I mean, it's like, is he ever? No, you have to even if you didn't bump into the kid. You
Yeah,
know?
yeah. He went even extra in the opposite direction.
Yeah. Yeah, it's just like it's insult to injury if like you actually like if you actually like if there's other bad optics to it.
Yeah. He's lucky social media probably wasn't as big then. It'd be a viral video.
Oh
Man,
no, you're right. That like
yeah.
he could have been like in today's world, that man could have easily been canceled.
Hmm.
I mean, I don't know. I don't want to get too far into this, but I, I feel like when you see the firings, and by the way, I'm not even commenting on like if this is good or bad or like whatever, just that it exists. But I feel like what I've seen, and I'm just cutting some because I'm not really interested in booking. Well, actually, I should look at the technicals before I cut it. Um, we have an open booking positions, right? I think. I think that one is good enough for me. Oh, look at me. Maybe just jumping to conclusions on book now. I think we have an open one, Stephen, but you can tell me. There's actually a nice trend on booking. I might not be able to ignore that.
One open.
I might get another one. I really like that trend. Chipotle on the other hand, I was just like looking at something. I mean, LRCX. I think we're involved enough in that. Uh, we're involved enough in NVIDIA yet. But yeah, I did want to get these three. And, maybe I should just stop doing all this crazy delete stuff and just adding one more row to this stitch. I think this might be our longest live stream ever, Steven.
I believe so. I think we hit 2 hours once before.
How many people do we have still?
We have 17 right now.
Wow. Congratulations to all of you for sticking to the end of this portfolio. I mean, it's good stuff. I think you're gonna get some good recs here by the end. Or already. Yeah, so we like booking. I think we have one snow open, correct? We just have
We
so
have
much chip.
2 snow.
Yeah, I think we're gonna need more. Ooh, interesting. Oh yeah, we definitely want another ASML. Thank you, Signals, for beating me over the head with that. I yeah, we have ASML. Just to be super clear, ASML looks like a bot right now. I think we only have one Eli Lilly, right? That looks to be coming on.
Yep, 1 Lily.
I paired that. I don't know. Like, have you heard people talk about like Pan West much?
No, I haven't. What is Pan West? Energy?
It's kind of, I think it's like server security or whatever, like something like that. They do something in like I might not be. Oh, cyber. I think they do security too. We're gonna get back into Lulu. But anyway, yeah, it's like some people. It's like seems like a little like meme stocky, and I've seen people talk about it, and it's just like kind of funny. It seems like a pretty earnings. Okay, touching that. Not touching it. Do we have any open Adobe? I think we have an open Workday. That looks good. Can you talk to me about the net option sentiment on Workday and then tell me if we have an open Adobe?
No Adobe. Uh, Workday, it's at 83. It was at 82 this morning. It's hitting higher lows. It's kind of trend is kind of neutral, but higher lows. Actually, this trend is like one of the first times I've seen it. It's like the older dates on the thing are kind of downtrending, and then it kind of slightly upswinging to make it neutral. But it's like kind of you could see the bottoming of it.
That sounds good. Oh wow, Accenture. Looks like we caught Accenture at a nice time too. Look at us go. All right, this is kind of like I'm happy about this because we've now added in enough longs. We can target some shorts too. I always like to make sure we can mix it up a little bit. I keep seeing. We definitely need to add. We're always looking at I. It's always kind of around. What we're gonna do? See, we might finally be time. We've had our eye on this one. Oh yeah, there we go. It's time. And yeah, actually, I think we have an open BXMT, right? I have to compliment you. You've gotten way faster at these checks. You used to take forever.
VXMT no, unless it's a short. It's a long, right?
No, we're in
Yeah,
shorts.
none open.
Interesting. I think I remember exiting that. It's kind of funny. I really respect Blackstone, so it's always interesting when I'm being put in the position of betting against them. They've got good people at Blackstone. I'm saying morally, although I'm not saying they're bad people. But, not a lot of Nobel Prize winners at these boutique investment banks. Unless we might catch that. Oh, MAXN has burned us so many times or whatever. All right, let's look at leg, which went in our newsletter. I always keep telling myself I'm going to do that. Oh yeah, that looks great. We might have missed it this morning, but who cares? We'd love to see that for our newsletter. We're excited. HSBC has been really low on this for a while. Yeah. Oof. Looks like it's time for you. All right, I think we might want to like calm down. We don't want to go crazy. Although I want to look at EQC because we do like parody. Oh yeah, another great call for our newsletter. It looks like. Do we have an open X like US Steel?
We
Oh,
do.
and I definitely want to know CPRI if we have an open CPRI.
We do not.
Mm, it's all right. KTRX. All right. CPRI. I don't like you. I think it just might be one of those things. US Steel just always. Maybe we're gonna take another flyer on it. It's a diversification. This is a good short diversification. All right, I think we gotta go down here. We can't just ruin all our good work cutting these shorts by like opening up a bunch of new ones. I mean, we did a good long. So how could we ignore this? Valley National Bank Corp. It's looking bad. Oh, I do want to look at if we're gonna do that. I want to do something. Try to do something on the smarter side. Um. mm, I think if you look at our what do you do? SMPL. All right, this looks like yeah, I mean, we got it. Good time. All right, so we have that. But I'm wondering. I think I might. No, we're still exposed there. I think I might 2x. We're gonna 2x ACN, Adobe, and Eli Lilly. Yeah, I'm gonna do that. And then we'll sort out that problem. And then the only other thing I was gonna look at, uh, well, we're just like boiling the whole ocean. Try to get it sent out at 1:30 to make Brent's life a little easier. It helps me with the model portfolio updates. But like some of these I want. Some of these are spicy. And I want to get them out. Oh, I need the market update from you. The last one before we write that.
QQQ is at 47 and SPY is at 55.
Okay. That's easy enough to explain. That. I'm trying to figure out where I sell. I think it's like in a long-term or short-term bulls. Can you tell me if you see this? There's like Apollo in there or something. There's Apollo and one other one. Well, I'll just check out Apollo. That's one that I like as well. Basically, if there's any Like, I want to know if there's any. Apollo's not good. Um, that's a little nice. I'll actually just take one more look at the sectors. Where we send it. Do blah blah blah. But do anything looking interesting? We were sent. We're we're sending this monster out one way or the other at 1:30. So actually, whatever. We are very exposed on chips, so I just have to keep my eye on that. But it's just like not the worst thing to be very exposed on. There we go. That's how we're gonna take care of our little short adding problem. I'm actually gonna like do one more. I want to look at FFLR because if we're getting MAXN, I don't want to miss on like some solar change. No, never mind. That idea got killed fast. All right. So are we all ready? We're ready to send out this letter. We want to send it out like right at 1:30 to make Brent's life easier. I said I wanted to do one more thing. Yeah, I'm just gonna like look at the app, and I thought I saw like I actually thought I saw like Apollo, or I'm trying to find one of these. Um, Dell is in the short-term signals right now. What in God's name is going on with Dell? I didn't think I was ever going to say this, but perhaps it's time to buy some Dell. What the hell is going on? Does anyone know what's going on with Dell? I didn't even know they were a company anymore. I thought they like manufactured dinosaurs. Um, I'm not gonna do it. It's like if anyone know, oh Marvell is partnering with Dell. I just don't know. I can't I can't wrap my head around this. I just like maybe it's another Zuckerberg thing, but okay, Apollo, yeah, Apollo was in there. Um AMR. I feel like AMR. Just looking for maybe some more long, maybe looking a little too hard. Oh no, we gotta get this out now. So AMR is the last thing we're doing. Because we're gonna get out at 1:30. Come hey, oh yeah, we're gonna do that for AMR. Okay. No, that's the one. I don't know, I think it's more up. Oh my God, Steven. All right, we're gonna be done. We gotta be done. 129. It'll probably land at 1:30. Blah 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 blah. All right. Thanks for everyone for sticking with us. This was. Did I just? Did I draw the paid line? Yeah, I did. This was an absolute beast. I hope this was helpful to those that did all of the staying. Um, any questions before we end this now our longest stream ever?
Who's Dell? I see.
I like. Oh, who's Dell? Dell was like where I bought my like computers in like the 90s. I think like it was last time I did business with Dell, or maybe it was like the early 2000s. It was like right at the crossover, so that gives you an idea. And they used to make personal computers. Um, they used to do um like you'd order a special computer that was like made and like because it used to be like they would like you what certain chips or there wouldn't be enough RAM. Like Now, like, computers generally, like, work when they can run, but, like, back in the day, if you didn't know what you're doing, you could easily order yourself a computer that couldn't actually, like, play the computer game that you wanted. Um, so that's why you had to, like, deal with Dell to be like, "Oh, I need to, like" basically, I had to, like, pick the specs for my computer, and then they would send me a computer of the right specs. Alright. I gotta get out of here. Thanks for the spending the late morning, early afternoon with us. Um, and yeah, hopefully see you guys Wednesday.
Yep, we'll be back Wednesday. Thanks for coming, everyone. Bye, George. See you Wednesday.